I gotta do this all over again. My microphone is muted. All right, take two. I'm back. Week 3. I'm sorry I did not make a video week 2. Stressing out a little bit too much about planning and perfection, so we're just gonna go right into it today. So last week took a loss. I'll show you here. Little 216, and then took another loss this week for 461. Not great. We're under 50K again. This was a manageable loss. I said I was gonna trade once last week, and I did that. Not a great trade, but we'll go over that. And then this was a little bit of revenge trading, I'll be honest with you. I really didn't want to go over this because this is something that I thought that I guess mastered, but I don't think it really works that way. So I only lost 0.9%, but that's 0.5% more than I would have liked to lose. So not great. A lot of learning this week, a lot of new rules. But I'm going to take you through kind of my thought process for why I entered 3 positions when I should have only entered 1, and it should have been much later, and should have, could have, would have. You get the idea. Okay, so I'm gonna put the face mask. I'm gonna put it over here because we're gonna be looking a lot at this 15-second chart. That's kind of what I'm looking at here. This is my VOD. Let's go into trade number 1. Okay, so this is Tuesday. This is CPI day. Right after CPI, we see we broke above these highs here. And then we moved lower back into this 5-minute bivvy. Moved higher, formed relative equal highs, moved lower, blah, blah, blah. We're kind of rejecting off of this 5-minute bounce price range right now. Let's kind of just go over what I'm thinking here. All right, so I'm noting that little gap there. That's SIBI. Now you see how I have this eyeball here? I'm kind of fading that completely. We're getting that rejection off this bounce price range. We can see that here. But I set the limit anyway. Let's see how I'm reacting here. So now we're kind of rejecting here. I'm kind of like, okay, body's respecting this, the wick's expecting this. Let's scroll up a little bit. Now we break above. This way you can see it on my face. I'm hoping it goes down, you know? It's really cool. You should definitely, if you're not doing this, record your own VODs and review them. Especially if you have a face cam too. Now that I have a face cam, oh man, I'm not gonna hide from anything. I can't. It's always when I like go mute. I think ICT said something about that where you know something's going wrong when they stop talking. So now we're treating it as inversion. We're tapping back into this is what I'm noting, that bivvy here. Now we're breaking back above the size. Now what's gonna happen is gonna explode higher and reach for these relative equal highs. I know that. That's why I'm hovering over that close position, but I'm waiting for it to come back down into here so I can exit at break even and watch what happens. Taps it. That's an exit. No exit, okay. And explodes higher, see? I was thinking about exiting right as we tested this, but I wanted a little bit more. It's fine. Greedy. So that was first trade, number 1. That's a 0.25% loss. Let's move on to trade number 2. So now I'm like, okay, this is gonna go higher. We're going back to this constant encroachment, the lower quartile constant encroachment of that CPI wick. So now we're here. We are currently at 924. Now I'm looking for price to get all the way back up here. We are in a deep premium. And if we go into my daily analysis, you're gonna see we're gonna wait for more information post CPI, like a bearish retracement, but execution now would be forcing a high with not enough information. We're still 50-50. I was like, okay, I'm waiting for CPI, bullish sponsorship, but overall, I would love to see it break lower. What happens eventually? It does break lower. So why am I looking for longs? That's a great question. We go to a 5-minute chart here and go to Tuesday. CPI is here, okay? We are currently at 930-ish, so we're kind of retesting this wick. You can see price does, in fact, gravitate lower. So bias is bearish. We're looking for that impulse protection lower. We've already induced the buy side here. We're kind of retracing back into this premium to gather the inefficiencies inside of that wick. And I should be looking for a short. even if I'm not looking for a short right now because I'm not convinced, I should not be looking for a long because this is a D premium, okay? We did this. There's no reason for price to continue higher. We're not showing that willingness to show that bullish sponsorship. And that is where the first flaw begins. So now I'm looking for a long here. Off of that 930 equities open, we get the entry pre 930. Ugh, not a huge fan of that. Usually when price does something like this, now we are inside of that kind of macro, I call it. It's not really a macro because ICT says there's only hourly macros, whatever. I look at the time frame between 928 to like 932 for that equities open volatility. This entering here already, not super favorable. But we do get a rejection higher off of this old high here. Okay? So let's play it from here. Note that 15-minute civvy from earlier. You see how that rejects perfectly? Where does it go? That's my excuse. You see anything in here? What a bummer. I'm thinking that I get stopped out too quickly. I'm forcing this long in a premium. Price is wicking into that gap. Now you can barely see it here. Body's closing not even at that high. I'm looking for a long back into this order block is basically what I'm looking at for continued sponsorship higher. Again, we're in a deep premium. This is not a trade I should be taking. I should be walking away, honestly. The new rule, which we're going to get into, is after a loss, 10 minutes, step away from the charts, and just kind of take a breather, basically. So I'm noting this 15-minute bivvy, or 15-second bivvy, excuse me, and you see how price is kind of contracting here? We reject at that low. We move higher, right back into that gap here, right back into that constant encroachment, and watch us dump lower through that bivvy. All right, we get a little bit of rejection, actually. We should dump right through this bivvy and seek this sell side here. Start displacing lower. I know this is like kind of hindsight. I haven't reviewed the charts to know every single 15-second chart. You can believe me if you want. I don't really care. I've had VODs of me forecasting the 15-second chart candles, but I kind of like this sort of format where I'm going over my thoughts and why they were wrong and what is influencing me to make these wrong decisions. But we do actually break higher back into this gap again. Seeing that rejection off of this old high here. Body's still respecting this gap. We're going to reach for the rejection block above this high. I don't remember if we do, and I'm not going to look at the charts. And then we dump lower through that gap again. It's not wanting to break through this constant encroachment. Yep. But I don't look for a short. Look at my face. There we go. Oh man, I am pissed. This is funny. But yeah, basically I don't take any more entries. I miss a short. I was trying to get price to come back into this gap. We see that sponsorship for that move lower, and then we break through. I'm using my finger like you can see it. I'm breaking through this low here as the VOD ends. So, yep, there it is. Any closing thoughts, Jacob? Yeah, it's okay though. You know, you have to make mistakes to learn. So let's make this a little bit bigger so you can see me again. And then we're going to talk a little bit about make it a little bit cleaner, this kind of review here. So let's bring this guy up. And we're going to see something. Oh, wait, you can't see my screen because I made this big. By my professional editing. There we go. All right, throw that back in the left corner. Go back to Tuesday. Okay, so what's going on here? CPI breaks higher, retraces back lower, uses that 5-minute balanced price range here, and rejects higher again. We're on a 1-minute chart, but let's go to a 15-second chart. So we're reaching that higher time frame level here. So there's the higher time frame level. There's the bearish market structure shift here. Here's the gap. We'll just use this bivy here as the example. Bivy or civvy? Civvy. Marks our shift. Price returns back into an internal range premium. We'll use this guy here. Back into that 79 level, 0.79 level. And then break down aggressively lower, aiming for the 830 lows, aiming for the previous session low, that like the dead zone lows, I suppose. Let me just put a horizontal line there to know which is what and when it's reached. Go to a 5-minute chart to clear this up a bit. Back to this overnight session in trim low here. Whoops. And Asian range lows here. Okay. You see how price reaches below the dead zone lows and the overnight session lows here. Kind of consolidates, returns back into that old low as resistance, and then gravitate back lower below this low, and then forming that AM session low right here. What was my low of day calling for? Well, if we go back to my session analysis, waiting for draw higher, waiting for CPI, waiting for these highs to be broken, and then lower, this 6,300 level. What does price reach? That 600, 300 level right at the AM session. Okay, so what went wrong? Was it the wrong analysis? No, it was impulsivity. It was a need to be doing something. It was a lack of discipline. It was a lack of patience. A lot of different things. I'm still human. I know. Sometimes I wish I wasn't, because I wouldn't have to deal with the emotions of being human, you know, just being able to trade like a robot. That'd be pretty nice. But unfortunately I am. And what I noticed, and I mentioned this, is once I reach that 1.5 hour mark, I'm kind of cooked. My brain is like, I can't be staring at these 15-second charts anymore. And it was the same day that I did those not high probability entries, where I was like, okay, get me away from these charts. I need to play something so that I can feel like accomplished for the day, you know? So now I have to, for sure, I need to restrict my time in front of the charts for trading to 1.5 hours maximum. Going into next week, the goal is to, if I take a loss, I am walking away from the charts for 10 minutes. Okay, as soon as I take it, I walk away, just kind of reflect, and there's no reason to be entering a trade right after a loss. I'm not doing it. Okay, walk away. Second thing, I am restricting the time in front of the charts that I am trading down to 1.5 hours. No more 2 sessions, 3 sessions a day. Mentally can't handle it. So we're not doing that either. Thirdly, since we are under the starting equity, we are going to be utilizing that 0.25% risk again. And the maximum amount of losses in a day is going to be 2. Maximum for the week is going to be 3. Okay? So if I take 3 losses, I'm done for the week. If I take 2 losses in a day, I'm done for the day. That's all the rules that I'm going to add for next week, and we can see how that goes. That's all I got. I'll see you next week.